I had that off on accident. What's up, everybody? It's Ted here with Body and Wix, and we have emergency update. I got on after I got done, well, getting this ready and prepared and getting ready to talk to you guys about a specific kind of video. We're gonna do a specific kind of day. We're gonna instead of just going over some charts, we were actually gonna do a lesson on some breakers. And as soon as I opened up Twitter, I saw Ethereum was trending and I didn't know why. And then I read this. Hold on. Let's see if I can pull it up here really quick. We see this here. This Mr. Whale, FTX chart says FTX hacker, aka SEC of Bahamas, sends ETH to unknown wallet and swaps tens of thousands ETH into BTC in the last few hours. And this is all over the place. I mean, just in FTC hacker has converted 25,000 ETH worth 30 million into Bitcoin. On-chain data reveals. So did he turn $25,000 into 35 million in Bitcoin? I'm not really understanding that. Either way, this is huge. If this is the case, this is a big, big thing. Which is very odd because I was actually longing Bitcoin for the moment. And I may not be. Well, actually, I'm not down that bad. I'm really not down hardly at all. I'm not down as much as I am with XRP and Tron. Um, but still, that's crazy. I mean, somebody they just sent. I mean, it sounds like this was pre-planned from somebody. They just sent somebody to an island and let him turn the ETH into Bitcoin. I don't know if that's a flaw in the uh, the Ethereum 2 system, the proof of work, or no, sorry, not the proof of stake system versus the proof of work system. I don't know if that's an issue with that. Um, Man, I don't know anything. This just came up, and I'm just getting all the news. You guys are probably gonna get the news before me. Um, it looks like it is just now hitting because before that was ETH giveaways. FTX account shares, dumping ETH, FTX account shares, ETH. Okay. Ethereum Fable, the Dragon. My important. Micro First, Crypto Scalper, BTC, ETH. Oops. I don't know what I just did. I don't know, but I'm on the Brave browser. In case you didn't know, it's the best browser out there. And it pays you in BAT tokens. Check it out. Hey, not much, but it's better than nothing, right? Um, Vitalik. Oh, it said something about the fable of the dragon. Wait, what did he say? Fable of the dragon tyrant having a safe sex for solvency and beyond. Okay. Success next target is abolishing daylight savings time is making it permanent. Isn't okay. Well, that's November 18th. I mean, so wait, did we just have a daylight savings time this past week? I guess so. Thanks to okay, okay, CEX for solvency and beyond. So CEX. Wait, we'll call it. CEX is CoinEx. CoinEx is Central Exchange, which is odd because China always wants to get out of the the crypto stuff, but then they keep popping up with crypto stuff. I guess I got out of farming completely, but now they're only letting, I guess, certain exchanges exist, and they only exist in Shenzhen. Nowhere else in the world, or nowhere else in China, is allowed to have a central exchange. I heard that like teachers and stuff were like hurting minors and stuff like in their classrooms. I don't know, crazy stuff what China's doing over there. But hopefully they get their head out of the sand at some point. And they realize what's going on. Let's read what this says here. Function for computing parent node given. Okay, this is about. Okay, it's probably about building something in Ethereum. I've had a lot of proof of assets. Here we go. Dealing with cold storage, dual use. That's one thing I really haven't. I mean, like I understand cold storage, but I don't understand if you have cold storage and you have it on your wallet, are you able to trade it? Like, does it work that way? I don't know. Can somebody with like a ledger let me know? Oh, by the way, I will post a link in the description. I am an affiliate for Ledger, and you can. There's certain things you can get like 10% off on. So yeah, if you're interested in the Ledger, please check that out. I know they're an affiliate of FTX, but they're the only one that is operational. That has been proven. And I don't know. I was checking out some other cold wallets. I think the ledgers are a little bit more sleek. But there's some other ones that have a little bit more different functions, cooler functions. I don't know. They're all different, but I really like the ledger. So I'll be putting that in the description. So let's see here. Okay, option custodial exchange, e.g. Coinbase today, non-custodial exchange Uniswap today. Okay, exchange side risk. User funds may be lost if there is a problem on the exchange. Okay, user can withdraw even if exchange acts maliciously. Okay, user side risk. Exchange can help recover account. User funds may be lost if user screws up. Okay, so we're talking about basically like a custodian, I guess, like a backup, and a backup would be central. Inclusion of future better exchanges. Okay, so I did some kind of test today, is what it sounds like. The category of DEX is just as Uniswap, future, maybe exchange sex to do with list not cryptocurrency. Both types of exchanges will continue to exist, and the easiest backwards compatible way to improve the safety of custodial exchanges is to add proof of reserve. Okay, this is interesting. Oh, proof of reserve. Aha. Okay, so proof of reserve. I get why this now. I was reading up on FDIC laws. Now, if something was to happen to a company, they dissolve, they go under, and it's a crypto company, there's nothing they can do. They can't pay you back. Now, however, if they have that same amount of money on the books in a bank, then if something were to happen to the company, then they could be insured by the FDIC. I think this is where this comes in, which is what they're saying, proof of reserve. This consists of combination of proof of assets, proof of liabilities, there are technical challenges in making good protocols for both. We can, okay, in both open source software. Okay, the longer term future. My hope is that we move closer and closer to being non-custodial, at least on the crypto side. Okay, what is he saying there? In the longer term future, my hope is that we move closer and closer to all exchanges being non-custodial, at least on the crypto side. Well, then who would be the custodial? Uh, Wallet recovery would exist, and there may need to be highly centralized recovery options for new users dealing with small amounts, as well as institutions that require such arrangements for legal reasons. But this can be done at a wallet layer rather than the exchange itself. Okay, that makes sense on that side. Movement between the traditional banking system and the crypto ecosystem could be done via cash in, cash out processes native to asset-backed stablecoins such as USDC. However, it'll still take a while before we can fully get there. I agree, Vitalik. I agree. So, but this is actually a really cool idea. I do love the proof of reserve system. 100% behind it. I think this is really why I got behind Nexo whenever it first came out, because they were the first ones that said, hey, we are FDIC insured. BlockFi isn't. And pulling your money out of BlockFi was like pulling teeth. Like, you had to wait, you could only pull so much out. Then you had to wait X amount of hours before you could pull the rest out. And I was like, this is stupid. I was like, this is my money. So I was behind Nexo all the way. Nexo is using, not Bitcoin. Hello, Coinbase as their custodian, and they also acquired banks for loans. So, I mean, Nexo it was leaps and bounds ahead of this game, I think, and I commend them for that. And if you are interested in Nexo, there will be a link down at the bottom. You want to check it out? Hey, I'm gonna shamelessly plug myself all night. 25. I think it's 25 in free Bitcoin if as long as you spend 100. And you can spend that 100 in stable coins. And I always tell people to transfer the stable coins. So you already bid in, like me, whenever I use Coinbase, I use a credit union card, and whenever I buy USDC, I don't have any fees incurred, even though I'm not using like the Coinbase Plus or whatever it is. I just think it's the credit union that's probably helping me out. I do have the Coinbase card, so I get the my point whatever percent back, and then I'll go in there and I'll buy however much crypto ever I need, or I'll actually use a direct deposit and put that directly into it. It's easier to always going back and buying and buying and buying, especially whenever it takes time for it to come up. But yeah, this proof of reserve is awesome because sometimes it can take 2 or 3 days before your fees go through, your stuff goes through. Like, I think I just put like $150 in the other day, and like 90 of it went through like right away, and then like I had to wait like 2 more days for like the other 60 to go through. It was weird. So, yeah, proof of reserve system, awesome, love it. And that is it for the crazy updated all of a sudden came out of nowhere news that came at me. I don't know what else to tell you. Let me see if ETH is still. No, it's not. I see pump. Pump is trending. What? Pump it up. Pump it up. We got a little pump. We got. Okay, SMB. Okay. All right, so I don't really see anything going on. BTC is visible. Cheems Inu. Yeah, I don't get it. I've seen this Wi-Fi been pumping hard. Um, let's see here. CCCIO. What is this? Is this a new crypto community? It's 2017. I guess I never heard of it. I always hear of new things whenever it's like way too late. Just like IPFS. I had no idea that was even a thing, and just until recently. Um, all right, Volt. Oh yeah, that was probably. Oh, that was Volt USD. That looks like. What was it that did that same thing just now too? Hold on, let me see. XRP kind of did something very similar. Um, but yeah, all right. So let's go ahead and jump over here to what I've been trading. Um, Tron. Yes, I have been trading Tron. And it looks like pretty much did what I thought I was going to do. I was like, probably could get up here and then clear this liquidity. Oh, yeah, that's right. And then when it hit bear shorter block, I said it was probably going to drop down. My fear was that it could get lower than this, but I don't think it's going to because it's not equal lows. And that wick is about halfway through the main bullish order block. So that's what you'd look for, main bullish order block, right? Bullish order block, I would go from body to body, measure body to body, because that's where most of your trading happens, right? I'm going to double click on it again and get rid of the 20 and the 30%. Only for... Oh, that would be for last night. Well, tomorrow night, actually. Oh, no, tonight. It's hello. It's Sunday today. All right. So it reached barely into 50%. Okay. Then I was saying, okay, if it got down into here, then add to position and leverage, which I have. Let me see which one I'm on. I'm using 3 different exchanges right now. I hate to say I'm using KuCoin, I'm using Mexi, and I'm using L Bank all at the same time. Just because, well, for one, my Mexi account needs a little bit more loving. And I got a lot of good loving out of it earlier with Tron. Thank you. Thank you, Tron, for doing exactly what I thought you were going to do. Let me see if I can pull this up and see what it said. Tron was... Oh, funny. He was only... Position history... It's showing a realized P&L only 5 cents. That doesn't sound right. Because I made like 20 something off of L Bank, I feel like. Make an L Bank really quick while... Preferences... Hedge mode, one-way mode. Oh, I didn't know you could change that in L Bank. That's awesome. order confirmations. Oh, let me just actually look at my price. Okay, yeah, I definitely made 20 something dollars in L Bank because I was at like $100, just a little bit less than 100, and now I'm at 120 something. I started that at somewhere around like $50. That's what I like to try to do. I try to start all my accounts somewhere around like $50, grow them, and then once I get like 2-3 accounts, all about like 50, 75 each, I'll pull them out all together. I'll throw them in something that'll be um, hopefully APY or liquidity farming, and then or I'll throw it in something else that'll provide some liquidity for me. Because everybody's always looking for something that will provide them, some kind of secondary income, right? So you're always looking for some kind of APY. Um, but I'd rather be looking for some kind of trade too. So I'm wondering if I should stop pulling out, just so much money early enough, because then that's not giving me a whole lot to play with, and instead bring back some of it and put a lot of it in. That way I can, those 1-2%, 3% of your account can add up even quicker and add up even more. That's probably what I should be doing, to be honest. Now, that being said, here we are with Tron, and boom, shakalaka. It is just now getting to the point where it's 8 o'clock in the morning, of course, and it's at Central Time. That's probably what I would expect out of this. Right at the turn of the clock. And let's see where I'm at. Tron, I am just a little bit below, and I'm going to start adding to the long. All right, open long. There we go. Yeah, because it got up here. It closed up here on the 4 hour. On the 4 hour, it closed above it. It hit the bearish order block, but guess what? It's still trying to come up to it. On its way down, it's hit these same, what it looks like to be kind of order block. I mean, it could probably come up about halfway and possibly slip down underneath here. That's a good possibility. I'm gonna have to watch out for that closely and hit this bullish order block to somewhere in the middle of that bullish order block. And then that should take care of it. Now, what's interesting here is that this is one of the things I wanted to bring up today, and kind of bring like kind of a special or focused concentration on a specific topic, and that would be the multiple blocks that we use in smart money. So the blocks that we have are not even blocks, but just the formations, or the kind of, I forgot, not exactly for sure how to put it, because it's not a retail thing, so it's kind of hard to explain to somebody who's usually doing retail, going, oh, well, you should follow this, slope pattern down here and do your Elliott wave, and also do your deep crab and your, wide shark. And us at Smart Money's going, dude, you're overthinking this, man. Like, you're overthinking it way too much. All right, price does two things, right? does two things, and that's it, right? Price looks for imbalances in the charts. Now, what do I mean by imbalances? Right? If there's two candles that wicks don't touch, that's an imbalance, right? Price is going to come back to that imbalance and close it in. That's what it did right effing here. Jesus. Let me hit back a couple times. There we go. All right. All right. You see that? I don't really know if you do. I don't even know if I even see it. Okay. I see it now. Try to bring it over to the middle. That way you guys can even see it better. We'll get all up in it. We'll get all up in this chart's business. All right, so draw a rectangle. Easiest way to figure out where. I guess I have a paintbrush. Rectangle, yeah. So from wick, go through the candle. Wick. Oh, I don't have it on. All right, magnet. Okay, magnet, wick, wick. Okay, there you go. That is fair value. That's fair value gap. That is an imbalance. That is what price is going to want to come back to. Oh my God. All right, let me lock this thing. So, oh, look at that. It came right back to it. Not only did it come right back to it, but it didn't even stop in the middle of it and go upwards, right, in the same candle on the 4 hour. It just went straight through it. Therefore, it's still acting as a fair value gap. So what's going to help it? This candle right here. This candle right here, if it goes up, more than likely, I have a feeling it's going to hit the top of this fair value gap and then probably start breaking down. That being said, that would be your breaker. Now, let's see if we can find an example of a breaker over here, because that's what I wanted to talk about. A breaker is something when you have a movement, a motion, some kind of formation in your chart to where it causes a low, a high, and then a lower low. That last high would be considered your breaker. Now, that acts as resistance unless, and this happens all the time, unless the chart decides to just run right through it, and then it'll act as support once it comes back down to the area. Yes, you heard me right. I know it sounds like the craziest thing in the world, but this is the honest to God truth. This is how I was taught to trade, and this is why you probably get your money taken away from you all the time, because you don't understand this is what smart money does. Because whenever there is, okay, let's just talk about this candle right here, right? This one right here. That is your last one, your last up candle before the downward motion, right? So you have, it starts like, stops here, then it goes down, right? Comes back up, and then downward. So you have a low, high, lower, low scenario, correct? And you've seen me probably draw this on other charts. If you have, and I haven't explained it fully, I apologize. I probably haven't. But I want to ensure that you guys understand what this means and why it means the way it means it. So we have a low. Okay, copy and paste that. High. And then paste this. Oh, come on, you stupid. Oh my god. Well, whatever. You get the point. Low, high, lower, low, right? Let's see if I can grab it now. Here's what we're going to do. We are going to visually order and then send it back. No, that didn't work. Wow. Okay, so let's see here. Object tree, text. There we go. So that's how you can find your objects if you didn't know that. A little quick trick, and see, I can't even grab it again. You just gotta grab this, and it's actually good for multiple time frames. Um, and you can actually name them over here too in the object tree. So, well, I don't even know where this went, so we're gonna have to grab a new one. and and that way, some of them you can actually make some of them show up on like the 4 hour only. Some of them will show up on like the 1 hour only. Some of them show, if you wanted to do that, you can do it that way. I mean, it's a lot of work. It just depends on what kind of chart you're looking at. Like I say, I'm the type of person that I like to look at like 3 types of charts, and that's it. But Bitcoin and Ethereum and Monero are not doing it for me today. They are just not moving. So I looked at quite a few more. Usually my next round is Ripple. I like Ripple. Um, then Tron has actually been another one of mine that I've been liking to trade. Usually Avalanche. Uh, Trying to think what else. Metis DAO, if possible. Um, um, and I don't know why, but DYDX recently has been a favorite of mine. Probably because it's been moving. Even if I go to, if I click over here, or wait, if I click over here, here's AVAX anyway. I think AVAX was actually on the rise, if I'm not sure. It was on the rise, but then it dropped. That sucks. Well, I mean, it dropped to. Oh, so it dropped to, okay, halfway of the bullish order block again for like the third or fourth time. There's Okay, this is gonna come up and hit this bearish area and then probably drop below here. That is also considered a because you have a low, right? Low down here, it comes up, moves up to the high, and then you have a lower low. So that candle right there is also considered um, um, a, a breaker. So that would act as resistance unless the candle just flew through flew right through it. I mean, and then once it came back down, the whole area of that candle would be considered the support area that would turn into support. It has nothing to do with a straight line or anything like that. Anybody who thinks of straight lines are going to get killed in this business because that's where everybody else wants to put their buy limit or their sell limit or whatever it is because they think that's, you know, you're taught that way, right? And you're taught that way because you're taught by some yuppie in a business suit who works for Chase Bank who's there to just laugh at you and steal your money as, he teaches this to you and walks away. So you got to put your thinking hat on and you got to think backwards about how you approach these situations, right? So um, that's what I think will happen to AVAX coming up. Um, FTM, I don't think it had much to do with anything. We looked at that. I was looking at XMR. Let me see if it actually comes up at XMR again. Nope. Oh yeah, it is. Okay. Let me see if there is a. Okay, this is interesting. Equal highs here. Okay, so equal highs are going to equal liquidity, right? Liquidity means that that is an area to where. See, this is why it probably fell off right here. People saw it come up here. They started selling. It did sell, right? Now, smart money at any moment is well, they're probably buying it right now, and they're going to send this up north. And look at this. There is a good fair value gap, 4-hour one right here. I want to see if there's a day one or not. Oh yeah, oh yeah, Jesus, woo! Look at that day fair value gap. That is one big day fair value gap. Boom, boom, all the way across. That is wanting to move up into that area. All right, and if you look down here at these candles, basically everything is balanced, right? Meaning candle wicks are touching candle wicks. Really nothing that's really too over, kind of full or anything like that. I kind of want to be ready for this, actually. Hold on one second. What exchange am I on right now? If I'm on, okay, I know where I'm at. Here we go, XMR. And it looks like it's going down and hitting. See, the thing with this is that this whole thing is a bullish order block, right? And now it looks like it's closed above here. So now that it's closed above this, the body of this, right? Boom. Yep. Came down. Open long. All right. Sorry, I had to take a second to do that. Now, it could go against me. I could be making the dumbest move of my life. I don't know. But to me, what I have been taught is that if it breaks structure, especially on the daily, this is the daily we're talking about, closes above a previous daily high. It doesn't matter about the wick. Don't worry about the wicks. Bodies are what matters, right? It doesn't have to close above the wick, right? Then we get today it's pulling back down, right? Just prior to 8:30, what would normally be the big volatility area, but it's Sunday. It's probably not going to be a volatility area. Sunday's volatility area becomes right around before the change of the day. So therefore, we could see a big run up into here or something like that before the end of the day. What I wouldn't be surprised about is this, right? Something like that. I wouldn't be surprised if we see at least it touch that area somewhere around in there or get into that area before it starts retracing. And that bottom number is, I believe, 150.35. Yes, 150.35. And we're currently at around 133.11. Woo, that's a long way to go, especially for XMR for Monero. But mean, nothing's impossible. I was saying the other day about DYDX. I said, hey, I said this thing's looking like it's gonna do this. I said it's probably gonna drop after that. Sure enough, that thing just went almost straight to the floor. I was like, wow. Like, I'm glad I called that, and I'm trying to teach. I got a student almost with me every day, teaching them how to do it. He's happy that he's learning now. He basically he told himself that he wanted to discipline himself, and I told him not to use money. I told him not to use money. I said paper trade. He's got a friend that's paper trading too, but he wanted to take $20, and that was it, and see if he could slowly turn this $20 into something else. And this was 2 weeks ago. He's turned it into 50 already. That's a way. I mean, just for starting trading, that's way better than I could have done. And it's not luck either. Like, he's seeing these patterns. He's seeing what I'm seeing. Like, he's catching on. He's not doing the retail thing and just like guessing and being like, well, it's got a trend line going up this way, and so we should probably buy with a trend line, right, boss? No, he's not doing that. He's not falling for that crap. We don't fall for trend lines. Only if they're phantom, right? I don't know if you know if a phantom trend line is, but phantom trend line would be this, basically. Hold on. Yeah, let me get this. Okay, so there we have pretty much a trend line. But it's phantom, meaning that on the opposite side of this trend line is liquidity. And at any moment, this could drop right through here. And of course, you're taught that it's going to hit the backside of it and then go down. Whenever I have seen this thing drop through it, hit the backside of it, come back down a little bit, and then jump over it, and then go straight up, I've seen that happen too. There's no rhyme or reason for what it does, and yet the people that teach you these things, these weird retail trading things, trying to make you think that everything's gonna happen the same way all the time. No. You gotta think outside the box. You gotta think all types of different weird things. So, but I do not think this will be coming down through the trend line. Not just yet. Yeah, it could be going a little bit sideways for a little bit, I believe. Let's see. It could come down and maybe touch trend line, maybe even get a little bit lower. I think what's going to cause the touching of anything, it would be actually this red candle here, is that is your last bullish bullish order block, right? So it could come down and then touch where the body of that is, and then turn around and come back up. Probably enter the fair value gap, pull back down, touch the top of the two highs here, push back up, and then maybe come back down after that. That's what we could see. We could see that, to be honest. But I'm not 100% sure. We'll have to see. But I did, I was in a long. And I just entered into, well, actually, no, I wasn't in a long in XMR, but I entered into more of that's right, I wasn't in a long in XMR, but I just entered into a long in XMR. Just because it looks like this should be going up, and trying to find this fair value gap that has been on the daily, it looks like. Yep. And then also watch out for this gap here. That was previously there. That is where we could see some overlapping. We could see some probably some consolidation. I'm not for sure, but that could take a couple days. So we'll just have to watch and see. But for now, and I'm going to see if there's any breakers, right? Because that was kind of the whole point of this. All right. So yes, there is a breaker. All right, and it is. All right. So how you count your breaker is your last down moment before the up moment begins, right? And then the down moment starts and closes below it. That is the breaker movement. Your last candle in the up movement is the breaker, right? So let me try to get the path out here. Okay, so here we have the bottom here coming up to, that is your last low, coming up to this high. If it would let me click it, and then going even lower. Usually don't like seeing this because you think it represents a downtrend, whenever that's not necessarily the case. Oh, come on. Just do as I want you to do. Okay, there we go. So we have the down, up, down moment, low, high, lower, low moment, your last upper candle, right here. Green candle, that is your last bullish candle. That is your breaker. Okay. Now, your breaker is overlapping with your fair value gap. That is where generally the price will get stuck. It will not get stuck, but will either get rejected hardcore and then come back and stay within the fair value gap and then jump through. That's the possibility. That's the whole point of the breaker. It could. Okay, so we did that, the down, up, down. Now, I want to show you a couple different possibilities that you should be watching out for. Because a lot of people think that if this thing just runs up and over it, that it's going to come back down and come back lower for some reason. I don't know why there's such a misconception there, but there is, and it's kind of annoying. So I'll drag you the path. And then what usually happens, all right, we got that right there is your breaker, right? Come up, usually touch, right? Come back down, hit the inside of the, or the lower part of the fair value gap. Now, what it could do, I've seen this do it before, do a little bit of consolidation in here. And then as soon as it's ready, it just, boom, zooms out. And then as soon as it zooms out, it'll come back down, hit it, and then boom, jump up again. Don't know why. This is the formation that is usually seen. One of the formations that is usually seen whenever we see the breaker overlap with the fair value gap. That is one, right? The other one that we usually see usually has to do with this. It'll come up here. It'll touch the bottom here, actually. Then it'll make a little bit of a pullback here, and then run straight up, and then come back down, and then go. Well, hold on. Come back down like that. Because whenever you're trying to fill a fair value gap, the price has to mitigate both sides of it, basically. Both sides of it meaning buying up and selling down. So before it'll leave that area and try to find a different area to mitigate. So that's why price likes to go to areas that have areas that have been I want to say gaps, but that's not the real word for it. Um, Areas that have geez, I'm the worst teacher ever. Why didn't somebody tell me that? Imbalances, that's the word. It goes towards the areas with the imbalances, right? So it'll go there, bounce around, go out, or it'll just run straight through it, come back, make sure that it catches everything on the back end, and then run off. It's one or the other, generally. Sometimes I have seen it completely just consolidate in between here. It's rare that it does that. And generally, it's rare that it does that is because if you've ever seen the market maker buy or sell model, you'll notice that we already have kind of a box here, kind of a box here, kind of a box here, kind of a box here. So that area's kind of already been consolidated in. So it shouldn't consolidate there again. Instead, it should, in my opinion, we should see a good run up here on this XMR. All right. That being said, now we have more breakers. I don't know if you noticed this or not. All right, here we go. Low, high, lower, low. I'm going to start marking them with just little marks. There's your low. There's your high. There's your low, low. Therefore, where is your last up candle? Right there. And we're still on the daily, guys. So, I mean, this is something that could take a while to, promulgate. I don't know. Especially this part for sure. Maybe the first part could happen today, could happen sometime during the whole week. I don't know. The second part that I'm doing may not happen till next week. I don't know. Start, maybe mid-December. I don't know. That's the thing. You can never really guess time on these. It's really hard to. I can tell you which times of the day when to trade and when not to trade. And that would be, of course, your Forex times. If you've traded Forex before, then you kind of know those times. Your London Open, whenever your London banks open, as well as Germany, so that'd be midnight London, 1 o'clock East or Central uh, for Germany, and then London, of course, financial center, primarily in Europe. That one is an hour later, so I believe it's 8:30 for New York, 9:30 for Central. And then at the end of the day, they'll ring the bell at 3, and your day's over with. All right. I was just talking about trying to do futures today too. It's funny. I might do some futures on the S&P micro. Or I think it's the micro. The one that's really really cheap. It's called like Nanos or something like that. Just to see if I can prove to myself that I could start doing some options. Even though there's multiple different strategies and things like that, it would be one I could afford at least, and could probably make a lot of money off of. If you've never done options, don't think about doing them. What I want to do is I was thinking about this earlier. Sorry, I'm getting way off track right now, but I want to find somebody who can program a token to mimic the indices of the United States equities indices. So like the S&P, the Nasdaq, the Dow Jones, the Russell, If we can get some tokens that can mimic that, and we could trade those on the, the legal way of trading. Can't even think of the word right now. Jeez, I'm so flabbergasted. I'm tired actually. Um, Futures. There we go. That, jeez, I don't know how I took so long to realize that word. Futures. If we could get somebody to create some kind of, because we have stable coins, right? If we have a stable coin, then we should be able to create a coin that mimics something else. That's my thinking anyway. I don't know. So if we could do something that would be like, something that can mimic uh, the Nasdaq or something like that. That'd be cool. That'd be so cool. So if there's anybody out there that wants to collaborate on a project with me, on how to do that, that would be. I'm extending my invitation out to you. The reason I drew this, okay, is that because that would be another breaker, meaning that would be another area that it would start off as, well, I probably drew this too high. It would start off as a resistance area, right? Because that's just the way it is. And the reason it is a resistance, I guess I never went over this, and I'm sorry I haven't went over this so far, is because when institutions get inside of these trades, right, what they do is that, like right here, you see, oh, this candle is a perfect example of it. This candle right here, oh, both of these candles. Whenever we have candles like that have almost no wick. I mean, like a Maribozu, like that one, or those two, that lets you know that there is um, institutions in the room, right? They're the ones pushing these charts around. They're not going to let a wick happen. That's going to be retail traders, unfortunately. A lot of us pushing it around. But they can let wicks happen, and they have let them happen, and they've let them happen in the form of liquidity runs. A lot of people see them as a sign of reversal whenever they're not. They're usually a way to poke somebody's either sell stop or buy stop or something like that, and then people, I don't know what they do, but they just don't do what they're supposed to do and just sit there and be like, oh, somebody poked by a balloon, just go do something else. I don't know. I don't know. I don't know why I said balloon, but whatever. Um, as you can see here, we have two somewhat equal highs, right? And here it is again. You have a low, high, lower low scenario. And look at that. You can see all three of those lows. And that's exactly why that low got broken. It's because there's a lot of liquidity underneath there. And the same is happening up here. Right now, array, boom. Okay. Almost equal with that one. So, as it comes up, hits this, it'll probably pull down a little bit, fill in the rest of that fair value gap. It doesn't have to fill in the rest of the fair value gap. It could probably do something like this, actually. Or, hold on, let me remove that. Instead of, it'd probably be just like something like this, to where it would get like halfway up. this one would barely like poke its head above it. Come down, fill on this. And yeah, so now we have the bottom part, fair value gap, then the top part of the breaker completely filled in. And now this needs to fill in, right? So that's the thing, is you never know how it's going to do it. And like I said, it pulled off down here. The next thing you know, it could be pulling up here and then all of a sudden drop off again and get right below where it was before. Pull up, get to where, you have like a little space there. Pull back. See if I can spread out a little bit. Oh. Hit this. And then that's when you get to the probably eventually eventually you're going to have to break these highs to break that liquidity, get to the top of the fair value gap or the top of the breaker. And it may hit the top of the breaker and reject. Who knows? It may go through the breaker and then get rejected somewhere else, come back, and then run back up. And that's the thing about breakers. The thing about breakers is that on one side they act as resistance. If they go through it, then they act as support. There's no way to tell if it's going to run right through it or if it's not. There's really no way to tell. Let's see here. Okay, I want to say DYDX was one of them to where it actually did that. It's either that one or it's Tron that ran right through its. Oh no, it was definitely this one. Yep. All right, so here, perfect example of what I've been talking about. Here you have low, high, lower low. The low closed below that, right? Yep. Okay. So where's your last high? Your last high can be actually these two candles together, since that last one's kind of tiny. I usually count just the bodies, but I mean, technically the real way to do it is to count the wicks as well. I like to just use the bodies because that is where primarily the volume is. Hello. I hit the wrong one. Where am I at now? Oh, there we go. Wait. Am I on the right? Okay, yeah, I am on the right one. Okay, well, this wasn't exactly what I was thinking of, but it's pretty much the same thing. Low, high, lower, low, right? Boom. You have this breaker running all the way through here. And what did this thing do? Ran up, closed above it, kind of dipped back down. It didn't get all the way down to the bottom yet, and then it ran even more up. And after it ran even more up, what did it do? Slowly came back. I mean, these are daily candles, guys. These are not 15-minute candles. These are not 4-hour candles. These are daily candles, and I can show you that this is happening on the 15-minute time frame too. So it's coming down here. It's hitting a low. This is DYDX, right? Yeah, I need to make sure because I know I'm in a trade with one of them. How did I short that too soon? Okay, because what I would look at, especially if you're getting something like this, yeah, like almost about halfway through that breaker is that 62%, the 61.8%. That is basically the what we call the smart money buying level. Smart money institutions they do not like buying in a chart until it is cheap enough for them. Think about it. How if you want to buy a pair of jeans, you can get them brand new for $90, or you can wait till they're 62% off or more. What do you want? Are you going to take the time to wait? More than well, I'll tell you what these people are. Why? Because then they're going to be able to resell it at 3 times, 4 times, 5 times the price. Makes sense? Hopefully that shopping analogy always helps people. But I never know. All right. So I'm going to change the color of this so it doesn't get too similar to everything else that I've been drawing. All right, let's get a red around it, and let's get a green inside of it. How about that? And then what I'll do is I'll just type smart money I. Well, I wish I could do all upper here, like you can in Pine script. And what I mean by smart money buy, this is where smart money usually likes to buy up. And what I can see here is that there is a fair value gap right here. I know this is a lot I'm throwing at you probably if you're very tuning into this kind of education for the first time, right? Fair value gap is a gap in between two candles to where the wicks do not touch, right? That is an imbalance that price likes to try to get back to fill it up, because we don't know if price got rocketed up through that and left an actual imbalance and left a gap, or if it just wants to come back and try to fill up that area. But 99, or it's about 95% of the time, fair value gaps get filled. It's rare when they don't get filled. And when I mean filled, I mean they go one way to the top of it or the bottom of it, depending on where it is, compared to it. And then it'll touch either the top or the bottom and then go to the other side. And then after that, then it's called mitigated. You can, move it over, get it off your screen, whatever. At that point, it's done with. It doesn't have to be touched again. Right, so that's what I'm saying is happening to DYDX. I'm thinking it is going to be coming down. I mean, since the start of today, it has been, coming down. Probably come down into the smart money buy area, right? Where the breaker is, probably to the bottom of the breaker. And where that at is right around the 80%. That is right around the area to where almost every pullback happens around the 80%. Look at Bitcoin right now. Look at Ethereum right now. I mean, and these are just small pullbacks. Those are major ones, and they all usually come about to about 80%. It really is. It's insane. Then it would come up, and you see, we got bearish order block here. Looks like so. It may hit that, then it may hit a bullish, and then it may hit a bearish, and it may hit a bullish, and you never know. That's the thing. You see, we got a tiny little fair value gap in here. Could get to before it turns around, and it could drop below some weird liquidity level and then jump up really high. That's just the nature of the beast. Or we could look at Ooh, I don't like this. This does not look good either. There's those two right there are about equal lows. So that means there's a lot of liquidity. There's sell side liquidity down there. What do I mean by sell side liquidity? Uh, I mean that there is on the sell side, if you're selling, if you're shorting, um, that there is going to be a big pocket or an area to where people are placing their longs, right? So, typical retail traders will do not short, long, something like this, right? And then, um, actually, they probably wouldn't even go that low. They probably wouldn't even get that good of a benefit of a doubt. They would probably go that low. Why? Because they think that these lows that it's came to, oh, those are rock solid. Oh, there's nothing that's gonna get lower than that. That's already too low. People that think like that are the people that are first to lose $6,000 and cry all the way home because they did not understand how this stuff works. Um, okay, so I've given you a couple of rules already. What number one was, price always looks for. What was it? Well, was it? Did I hear somebody say anything? Okay, if you didn't, that's okay because I can't hear you. I'll let you go this time, but tomorrow I better hear somebody screaming, or some other day I better hear somebody screaming the answer. It looks for imbalances, right? Those fair value gaps, those big gaps, those liquidity voids, things like that. Number two, what does price look for? It looks for not mutually exclusive to fair value gaps or anything like that. It looks for. No, you don't know? All right, well, it looks for liquidity, and that's what we're talking about here. This is where liquidity lies, right? And why does liquidity lie there? Because that is where most retail traders would put their buy limit at, because they would think that this is a safe, quote unquote, safe area to buy at. Why? Because it didn't get any lower than that. So therefore, they think it is a safe, you know, rejection area, safe support area, until you see one of these happen, right? And when this does happen, it just buries right through it, and then it finally comes back out the other end. So you have to be wary of that. And look, I mean, it's already made two equal highs. All right, so whenever it's made two equal highs, I don't think it's gonna come down this way, to be honest, and do that. Why? Because there's two equal highs right now. And where those two equal highs are, let's do a option H. All right, so it's going right through the middle of there. This is on the daily, by the way. We're still on the daily. That reached up. Okay. Interesting. Okay. So, if you're ever doing extensions, your first extension is going to be 127. What I always do is I always add the lines in the 127, the 150, and the 162. The 162 is your golden ratio. Golden ratio is typically where your price wants to go. So 150, See 162. Now we're gonna see if this lines up with anything on the other side of the chart. And okay, so all three of those are within this, what I would call the market maker buy sell model consolidation area, right? So then you look for the next one. I don't see anything that's consolidating, or not consolidating, but confluencing with that particular area. So we are gonna option H this one. Oh, didn't mean to move that one down. And then, okay, and here we go. Now we're getting into the bearish order block. Actually, this one's bearish order block territory, but that's where the equal highs are. Actually, no, that's where the 27 is, isn't it? All right, so the 127 extension is actually where the first bearish order block is. I'm a dummy and I looked over that. So you could probably see this run through the top of here, right? Get to the 127 extension, get rejected, right? And when it's getting rejected, especially if it falls, well, it probably shouldn't fall any lower than this. I would hope not. If it does, we're in problem. But the thing is that it's not always about how low it is. It's where the candle made the low, right? So here we have a red candle. So here we have a low, high. And if it comes all the way down here to where we think it's going to come down to, that's your low, high, lower, low scenario, creating another breaker, right? So one could hit the 127, pull back, and once it pulls back, then what we're looking at is we are looking at for it to hit that breaker again before it moves up. As soon as I can get a good solid rectangle on here. So going from body to body. I'm not worried about the wick, and you can see that there is no wick on the bottom of that candle. That tells you the institutions are in the room. Boom, right there it is. So after it gets up, so I'm going to delete this one here because I don't think this one is going to matter at all. All right. And then gets up to the 127, pulls back. All right. Ugh. Why am I? What is this doing? All right. 127, pull back. Gets inside the breaker, right? And then once it gets inside the breaker, you usually see it do, who knows what it could do. It could continue on. It could consolidate. That's what I would think it would do. It would probably do something like this. And consolidate for a minute, maybe get a little bit above it. I don't really know. But I think it would be something like that. Therefore, if we were to do another measurement of a fib, not that. Oh, geez, this thing is killing me today. Another measurement of a fib from there to there. All right, what is overlapping? Is there anything overlapping now? No, it's all still hitting that consolidation area. Except for right here. It looks like right here. Well, we're getting the 100 there. Oh, here it is. Boom. And then what we used to do with these Sometimes, not all the time, but especially if the price was a lot higher. Um, use a rectangle again, and draw in between that area. All right, so you're talking about the 127 of the previous to the 100 of the new Fibonacci, and it's not wanting to work. Come on, man. Why you gotta make me look bad in front of the women like this? All right, here we go. And let's see what it's going to possibly run into. Because if you think that all this stuff is by coincidence, you are sorely, sorely mistaken. All this stuff is planned. Look at that, right on top. It couldn't be any more perfect than that. Right on top of that high. So what's probably going to happen is it's probably going to come up to there. It's probably going to equal that high, pull back down, do another breaker, and then pull back up and do the same thing over and over again. Look, now this one, where is it equal at? The same, not the same high, but it's just stupid how coincidental these things are. And it makes me almost irritated that there are so many deniers out there that this even happens. They're like, oh, that has to be a coincidence. Oh, yeah? On every freaking chart? Are you that dense? Man, there are some dumb, dumb people out there, I'm telling you. And I hate to sound condescending. I'm not a condescending person usually. But when it comes to people that just can't see it, that it bugs me, you know. It makes me want to just grab them and shake them by their sweet little cheeks and tell them that they're gonna be okay and that they should just go live in a nursing home now, because life is gonna be hard for them. Um, and look, even here, where are we at here? This is at this is what to is that 300%? Yeah, that's 300%, I think, of one of them. And what is that? Pretty much right at the same high of another one. I mean, you can't get any closer than these things. And basically, what I'm saying is I'm calling the bottom of of the charts because I think we have. I think we have hit the bottom. If we haven't, Bitcoin maybe has a little bit more to go. Not much more. But man, it shouldn't make us wait around until the end of December to fucking find out. Sorry, excuse my language. To find out. Um, but yeah, that was my day of, or not really my day, but this was my way of looking at things, my way of looking at how to show you where um, and what to look for in in a breaker block, right? Because there's and it can the one thing I didn't show you was the breaker block going the opposite way. Maybe the next one I do, I can show you. I can do the other breaker block. And then we still got other core lessons to go too. Like we got the rejection blocks to go. We have the order blocks to go. We have the fair value gaps to go. So there are some major somewhat formations in this that we do have to cover, and we have to make sure that we know it well. And then once you see these, you're going to see these so easily that you're going to nail all these trades. Well, may not nail all the trades, but you'll get an idea of where the price is wanting to go or was wanting to go, and it may go against you, and that's fine. Hey, we all got to practice. I had to do it myself too a lot of times. And I'm still doing it, to be honest. But I'm just throwing out there what I think is going to happen. Also, I just want to go back and see if there's an update on what happened with the person turning 25,000 Ethereum into 1,000,000 Bitcoin. See if there's an update on that. Why is the Rittenhouse and mass shooting? Jeez, come on, people. Luna Classics. Yeah. Oh yeah. Luna. Yeah. That's gonna pump soon. Yeah. Um. Wait. Donald Trump's back on. They let Trump back on Twitter. Good lord. I knew hell would freeze over soon. All right. Let's see. What are these people saying? Sunday pump and dump day, huh? Let's see here. We got crypt. I don't know what that looks like. That's Volt. Um, what else is here that was pumping earlier? I saw we saw the Wi-Fi pumping hard earlier. Um, wow, what app is this? Oh, crypto market. No, it's FIFA World Cup day. Today we are giving away 10 BNB to CCCIO. I I think I said this earlier. I don't know if I've ever heard of this or not. All right. Anyways, that should be enough of everything. If there's anybody out there that knows anything whatsoever about IPFS, I would love to have your input and love to have your brain for a second because I need some information. I would like to know how to use this thing properly. It looks like my node is not working again. I do not know why. It was working earlier. Um, but basically, I want to take all the videos that I'm hosting on YouTube and make sure I have either a backed up or a private way to host videos on this new gateway server or whatever it is, library. I don't know whatever this thing is, but anybody has any ideas, please let me know. That would be great. Up until then, thank you so much for watching, and don't forget to wear your pants.